Hey guys, all right, so now we're going to talk about the accounting hierarchy. So that is the different ways that we can categorize or we see categorization of accounts. I would like to start off by saying that accounting hierarchies, they don't necessarily just have to do with the assets and the liabilities and the equities and the revenue expenses, but there are broader types of classifications in which you will see transactions being categorized. So, for example, an entire accounting string might make up of several different segments of codes. Let me illustrate. And so the first segment we typically see is the business unit segment or the organization segment. So if you can imagine, in any sort of larger organization, you'll typically have perhaps multiple geographic areas. And so if, for example, there's a Canadian operations and there's an American operations and there's other different geographical areas, they might designate the Canadian operations to be, say, a business unit 10, and perhaps the American business unit would be business unit 20, so on and so forth. And so this would be the first segment of their accounting structure. So what that means is that if the Canadian entity or organization rather delivered a sale, that sale would belong to the Canadian entity. Therefore, that accounting transaction would belong to the Canadian business unit. And so from here, we have more granular types of breakdown, and these would be illustrated as further segments in the accounting structure, particularly for Oracle. I mean, other systems are going to be quite similar. So typically what I've seen is that perhaps a more granular breakdown right after the business unit could be the department within that particular business unit or the cost center. Sometimes it's called a responsibility center. We want to perhaps track different transactions from the marketing area versus the sale, the retail area, etc. And so typically you'll have multiple different types of or levels of granularity. So say, for example, within one responsibility center, we want to track the type of activity to which that accounting transaction would be best described. So it could be like a marketing activity, or it could be, the sale of a particular line of business, like selling electronics versus selling, laptop sleeves as an example. So this could go on for several different layers of granularity before we get to the natural account. And the natural account would be, of course, what we were talking about, the assets, the liability accounts, the revenue accounts, expense, and the equity accounts. And even after the natural account, organizations might choose to further break down their types of transactions into perhaps a sub-account, or sometimes, very often, what we've seen is that if there's a sale among different business units, then you might see an intercompany segment that would denote perhaps the transaction moving from one business unit to another business unit. So that's an example of further breakdown for a particular type of transaction. Now back to the natural account. When we talk about the accounts, of course, we're talking about the assets and the liabilities and the revenues and expenses and equities. Typically, the asset accounts will be a numeric code beginning with the number 1. The liability accounts usually would begin with the number 2. The equities usually begin with the number 3. Revenues begin with number 4. And expenses might begin with 5, or they might begin with 6, depending on how the organization chooses to designate various different expenses. This is by no means a hard fixed rule. It is more so perhaps an observation in how organizations choose to organize their chart of accounts. This seems to be a recurring theme among companies across industries. So there you have it. That's the accounting structure that we're going to talk about. Now let's talk about each of the different types of accounts.